Hey there and welcome to our channel. In today's video, we'll be discussing Michael Burry's warning. US already in recession, inflation to spike again. We're excited to share our thoughts and insights with you, so let's get started. Hello and welcome to our video on Michael Burry's warning. US already in recession, inflation to spike again. Michael Burry, a renowned investor who profited from the housing market crash in 2008, has recently warned that the US is already in a recession, by any definition. He also added that even though inflation might have peaked for now, there will be another spike as the Federal Reserve starts to cut rates again. This is of great concern as markets are already trying to price in recession odds for the new year. Burry reminded everyone that an economic slowdown does not guarantee that the inflation problem that the Fed has been battling throughout 2022 is over. In fact, he predicts that inflation peaked, but it is not the last peak of this cycle. We are likely to see CPI lower, possibly negative in 2H 2023. He went on to say that the Fed will cut and the government will stimulate, and we will have another inflation spike. As you may recall, last year the Federal Reserve committed to a historic tightening path, raising rates at the most rapid pace since the early 1980s. Overall, rates climbed by 425 basis points, rising to a range between 4.25% minus 4.5%. During the last meeting of the year, the Fed slowed to a 50 basis point increase but remained firm in its goal to bring inflation down, warning markets that rates are not at a restrictive enough level and will have to stay higher for longer. It's worth noting that this is not the first time the US has faced such an economic situation. In the 1970s, the US experienced a period of high inflation and economic stagnation, known as stagflation, which led to interest rates maxing out at 20%. This was due to a combination of factors such as the oil crisis, the Vietnam War, and a lack of monetary policy response. The Federal Reserve's inability to control inflation at the time led to a prolonged period of economic hardship for the US. The government's efforts to curb inflation by raising interest rates in the 1970s led to a decrease in economic activity, which in turn led to higher unemployment and a decline in the standard of living. This situation was further exacerbated by the oil crisis, which led to higher energy prices. As a result, the government dropped interest rates in an effort to stimulate the economy, but this only led to a further increase in inflation. During the 1970s in the USA, there were several peaks of inflation. The first major peak occurred in 1973 and 1974, when inflation reached a high of around 12%. This was primarily due to the oil crisis caused by the OPEC oil embargo, which led to higher energy prices and a rise in the cost of goods and services. Another peak occurred in 1979 and 1980, when inflation reached a high of around 14%. This was due to a combination of factors such as rising oil prices, high interest rates, and an increase in government spending. The Federal Reserve's efforts to curb inflation by raising interest rates led to a decrease in economic activity, which in turn led to higher unemployment and a decline in the standard of living. Inflation continued to be a problem throughout the 1970s, with the Consumer Price Index, CPI, averaging around 6.5% per year. Despite the efforts of the Federal Reserve to bring inflation under control, it remained stubbornly high until the early 1980s, when the Fed's tight monetary policy and the recession of 1981-1982 helped bring inflation down to a more manageable level. The Fed then raised interest rates again in an attempt to bring inflation under control, but this only led to a further slowdown in economic growth. This cycle of raising and lowering interest rates continued, with inflation going up and down, until interest rates reached a peak of 20%. So as the country enters 2023, many are left wondering if history will repeat itself. Will the Fed's attempts to curb inflation lead to another prolonged period of economic hardship? Only time will tell, but one thing is certain: the nation has been warned. The markets are on edge, and the fate of the economy hangs in the balance. It is uncertain whether the government and the Fed will be able to resolve the inflation crisis before it escalates. However, it is imperative for the country to stay alert and ready for any future developments. Thanks for watching our video. We hope you enjoyed it and learned something new. If you liked it, please give it a thumbs up and consider subscribing to our channel for more content like this. Don't forget to leave a comment and let us know what you thought. Until next time, take care.